And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It's Capital Preservation Casual Friday, May the 20th. I'm John Hoagland. Thanks for trusting me with your time. I'm wearing shades this morning because our future is so bright I had to wear shades. As always, we're seeking accurate context in these markets, thinking about risk management, and always remaining patient in our trading. If you see on the opening sequence there's the disclaimer that talks about how risky and how we should be very careful trading futures. If you've never read it, go back after the forecast today, pause it there and read through it. Preservation, capital preservation, risk capital. It's all very important concepts to understand, and there is considerable risk in futures trading. So today, after a long, busy, challenging week, today, for me, is Capital Preservation Friday. I'm going to be very patient today. I'm not going to lose anything that I've made this week. I'm going to be pretty quick to call it a day should I get something good on the line and make some money early today, so I can start the weekend, and hoping that things are going your way if you're already in the markets. If not, we're going to see if we can't help with that. There's no important economic information. The markets have a pretty good opportunity just to kind of rest and chill out. Kind of what they did yesterday, at least in the equities. Not really what I was expecting, but I don't get to choose what happens in these markets. It's going to be a quiet day indeed as far as news and economic information. It always just reminds me, when there's no bad news, what do the equities have a tendency to do? They have a tendency to drift to the upside. Maybe some considerable consideration would be that maybe we'll have a little bit of profit taking at some point today. We're at our year lows, and maybe there's some money to come out of this market. Reaching for things that traders might be kind of concentrating on this morning. Apparently, China has loosened monetary policy a little bit over there. They've reduced their 5-year mortgage rate by 0.15%, 15 hundredths of a percent. The U.S. has passed a bill to send $40 billion to Ukraine in aid for the war effort. Please continue to pray for peace. As far as earnings today, just a couple of them. John Deere, the most important one probably, is beat earnings and revenue expectations. And unfortunately, the UK consumer confidence hits an all-time low last night. So we're not out of the woods by any stretch. There's still a lot of uncertainties in the world. It's a tough week this week for our equities. And we're going to take a look at this in the charts very shortly. We're just going to see if we can't find some context. Always thinking about risk management and trying to stay patient in these markets. It looks like the S&Ps have come back into range, probably not going to be opening with any kind of a gap, which tells me I may have the opportunity to relax and wait for something good to happen. So as far as the VIX is concerned, VIX is down 2.5% last I checked. It was $28.60 index, up slightly at 102.91, and the yield on the 10-year almost flat this morning at 2.85%. Gotta say good morning to everybody this morning. Frederico, I saw, was the first one in the room. From what I see, you win the prize this morning, Frederico. Brian Shaw, good morning. Tachyon, adjusting to micros. Test how it fares today in the Russell. Good luck today, Tachyon. Theo, always a pleasure to see you. Isaac J. Trades, good morning. Marcelo, Charles March, Dan Trader, good to see my friend Vince here this morning. Rusty Golfer, God, I just love that chat name. Christo, Terry King, Alfred, good morning. Stephen C. Ray, good to see you here this morning, you wildebeest. Trading Research, good morning. I don't know how people are first in the room. Must be something via phone alerts. I don't know. It's just when I open up the YouTube studio and it lets everybody know we're preparing for the forecast. They're able to just pop in the chat and say, good morning. And sometimes it doesn't show on YouTube the chats that come in before the broadcast starts, I guess. So when the first one comes in, I don't think everybody gets to see it, which is kind of strange, right? Mid-Country Gaming, good morning. Devon Federico, Steven, Dan Emmons, good morning. It was great talking to you on Make Hogue Money yesterday, Dan. It was a great session. Thank you so much for your contribution, everybody's contribution, everybody coming to see it. We're looking forward to continuing to expand on that. And Dan, you can be a big part of that. We really appreciated your contribution again yesterday. Also, we had Vince, we had my friend Matt Hoyt were the speakers yesterday. So and wonderful job. We actually made some money. Thanks to Dan's help, thanks to everybody's help. This is a group effort. We're voting on trades, and we had a good one happen for us yesterday. Kevin, good morning. Vince, looking good. Billy Ray, feeling good. Louis. Dan, it's OPEX Friday. Some tomfoolery afoot today. Isn't there usually? Joe, good morning. Force Driven, good morning. 15 away from finishing step 2. Nice job, Dan. It's going to be an ultra-conservative day. That's kind of the way I'm feeling, kind of the way I'm seeing it. Got to trade what we see. So if we don't see anything, I'm really not going to be all that aggressive today. I'm going to wait for the market to say, okay, here it is, and it's going to be low risk, and if I take it, again, I'm going to manage the risk very, very carefully. All right, 1,500 away from it. Nice job. James Swan, good morning. Jack Doherty, good morning, sir. Jack is a veteran of the futures industry. Always good to see Jack. That's John Doherty's dad. I worked in the lumber pit in the early 80s, and Jack Doherty was one of the brokers in there. Very nice man. Very good to see you. Sarah Hall, good morning to you. Prayers and love to you as well. Glitter Sandwich, good morning, everyone. It's trying to snow there in the mountains. Oh my goodness. It's 70 degrees and sunny here in Chicago. Looking forward to getting outside. Dressed for summer. And in Colorado, you're getting 6 inches of snow. And it's May, it's almost June. I guess it's not that uncommon up at those upper elevations. But I'm done with snow. I am so done with it. I'm sure you guys probably are too. 3 Lions. Chris, good morning. Yeah, you have a great friend named Chris Johnson 20 years ago. Dan, you're dating yourself. Good morning, Scott Saw. Lobster of the cracked crab. Lobster or the cracked? I don't know. I might go with both, Kevin. Might go with both. All right. We have a smooth thing going here. I think I have found the gremlin that was causing my problems. Everything is running very nicely today. Took a little bit of help from Gizmo here. Gizmo was a big help. Help me find this little guy. Stripe was the problem that we were having with the technology, and I think we've got it solved. So thank you, Gizmo. All right, enough of that. Let's jump into the charts and see what we're seeing this morning. Let me get the daily in the E-mini S&Ps, and let's take a look. Okay. So I got my gremlins in the way over there. So volume and open interest still increased on an overlapping to lower session. We know that the downside structure still remains. We have almost a double bottom here. We had a weekly kickoff low, which was last week's low, which was 38.55. We got to 38.56 yesterday before sellers backed off and buyers seemed to come in. It was a range-bound day. The overnight is when we put in this low. It's not a lower low, so I'm not that concerned about it. We have some signs of excess at this area, this level down here. So the excess, by excess I mean we have some long shadows. The market attempted to go in that direction, didn't do a very good job, and was swiftly rejected. Swiftly is a subjective term. In the day time frame, these levels are showing signs of rejection. That creates that excess. You know, the long time frame structure still remains down. Digestion day and yesterday, but we still managed to move value lower. It's looking like we're going to be looking for a different direction here this morning. Here's the 30. Settlement is down here, 38.97.75. We have all overnight inventory to the long side. So we know we've got a short time frame overnight pea shooter, weaker hands community holding longs, looking for help from the regular trading hours to continue to push price higher. We don't have the benefit of any late spike. We don't have the benefit of any gap at this point. So it tells me I'm probably going to need to stay patient, let the market establish its early range and focus on those extremes for the opportunities. And, you know, in the overnight high and low seem to be a relatively interesting areas for us. The overnight low here at 4 o'clock, we could not take it out here in the 630 bar. We've got a lower high here. And we've got the point of control and settlement very close together down here. Again, settlement 38.97 quarter. Now, yesterday I was looking for a bigger day. Was thinking that we might find some more downside direction. We attempted in the overnight. Couldn't get to the overnight low or weekly kickoff low. And we just kind of created an area of balance here. We're still largely in that area of balance. If we reject this area of balance in either direction, that I think would offer an opportunity, a larger opportunity for us. So overnight high is going to be a level that I'm going to be keeping a focus on if the market does get there. Overnight low, again, an area I'll be looking for opportunities. But again, I'm not going to be aggressive. The market appears to be opening in balance and in range, maybe a little out of value. But over the last couple of sessions, value is a little bit wider. There's always the potential for some repair from the big down day here on Wednesday. There's lots of toothiness. There's lots of single TPOs that just didn't get any attention. Market may come back and see if there's any attention needed in those areas. So that's why I'm really focusing largely on the overnight high. If we can't take out that overnight high, we've got all these short time frame longs here that could possibly bring price back down to settlement, point of control, which would be another area where I would look for an execution. Anything between the overnight high and overnight low, you're on your own. I'm not all that interested in anything in that regard because it's just been part of the range. So, you know, if we don't get what we're looking for in the short time frame longs on the open, that might offer us an opportunity for a short to get back down to settlement. And if you're more on the thought that the market may rotate higher with any lack of new information, then that could give us an opportunity to look for a long and better trade location. We just have the crude oil opening rollover is, for all intents and purposes, largely over. We've still kind of created a little bit of a balance area here and potentially a little bit of a bull flag. Bull flag, the market's been putting in lower highs, even higher lows, I should say, relatively even highs until recently. We just put in a new higher high. If this ends up being a bull flag, then there's some pretty big potential for the upside here. And let's think about the open interest yesterday. Of course, volume looks higher because this is now the new front month. Wasn't that great overall, I don't think. We also lost 8,300 in open interest on this push to the upside. Again, that this was the second day for this market to be, for the July to be the front month. So, cursor's gone again. Hang on a second here. There it is. I got it. So if we're kind of creating a bull flag here, we may be at risk of breaking out above it even today. Here it is. So here's our high. Here's weekly kickoff high in the July contract. Make sure you're trading July today. The June contract is going to be extremely thin. So we had this big move to the upside that did close above weekly kickoff high, but again, we lost open interest. That could be very much because it's rollover. Now it looks like we've opened above this little trend line here, and it's kind of a loose trend line here. We've got 1, 2, peeked through it here, 3, 4 points of contact on it. So if we hold above weekly kickoff high, I think there's potential for a continuation move to the upside to at least this high right here, which was 113.20. Would be a pretty decent move for us. But again, we've got to hold above weekly kickoff high, which is 108.50. Settlement was 109.89. We're kind of holding above this trend line. No gap. Take a look at the opening range here. Good morning, Keith. Hey. Let's roll forward. So pretty big opening range, 930 to 963, 33 tick opening range. We've broken out above it. It would appear that we may be seeing an opportunity for our overnight inventory, which is very, very minimal. There's no real overnight inventory. If there is, it's possibly a little bit long. So they're going to see if we can continue this market. Of course, our first target would be the overnight high. Here's that opening range again. The first minute of trade is the way I view the opening range. A lot of folks have different ideas and time frames where they look for the opening range. Some look at 30 seconds, some look for 5 minutes. 1 minute is my opening range, and so far it's the low of the session. Might keep me from trying to look for shorts. Not only that, we've got the opportunity for a potential breakout of a possible bull flag. Let's take a look now into the Nasdaq, which reads almost exactly like the S&Ps. As a matter of fact, it even says same as the S&Ps. Volume and open interest were higher on an overlapping to lower day, double bottom. Some people view that as a weakness. Some people view that as a rejection. Same signs of excess at the lows. We've got some long shadows on the ends of these daily bars here. Of course, we were well aware that the longer time frame structure is to the downside. We've got a long way to go before we're going to break that market state, and I don't see it happening today. Here's the 30-minute chart. We got some overnight longs here. Settlement, 11,878 and a quarter. Very similar to the S&P, is no gap. Are we going to kind of hang in the range from yesterday? Are we going to break out above the high and go into some sort of repair situation from the day before yesterday, our big down day? Are we going to take another look down to weekly kickoff low? I don't know. Our overnight longs have the possibility of bringing us to better trade location, and in the Nasdaq, that's low of value from yesterday. It's a little bit deeper of a move, which we might expect in the Nasdaq. I'm going to be really kind of, again, focusing not in the middle of this move, of this range. I'm going to be focusing on the overnight high and low, I think, for my better trade locations as the day goes on, if given the opportunity. We may not even get the opportunity. Gold. Well, I was a little bit disappointed when I opened up and saw that we lost open interest on this move to the upside. It is scheduled to roll next Thursday. Next Thursday, yes, the 26th is roll date for gold. So we're in a kind of a cycle of, there's a lot of rollovers going on, and we got the June rollovers for the equities and for the currencies. We're going to be looking at Treasury rollover next week as well. So I was kind of disappointed. There was a little bit higher volume on this move off this low here, but we lost 2,300 estimated open interest. So we had a little bit more volume, but the money didn't come into the long side. So our overnight high, the weekly kickoff high, which is 1851. What was yesterday's high? 1842. Last night's high, 1847. 1848 and 1848.10 was the high yesterday. 47.80 was the high last night, and so far for the session today. So it seems as though the money coming into the long side is looking at this area up here, the high from yesterday and last night, as kind of an area where they're not willing to take that next step. And that's what the weekly kickoff numbers are for. That's what those levels are for. They're not meant to like try and envelop the weekly range. There are areas where I believe longer time frame traders will adjust inventory, and knowing when the longer time frame traders are entering the market can really help us as day traders. So we had the big move up yesterday. It was a little bit hollow. We're in range. We're at settlement, which by the way is 1841.20, and our overnight high just short of our high from yesterday. Not really thinking that there's any inventory with which to take advantage of here. So again, I find myself just trying to stay patient, letting this market establish its early range and seeing if we can find some opportunities in and around the extremes of that early range, that initial balance. Don't see any reason to really jump into anything too quickly here in gold. And the euro, yesterday we only added 900 in open interest, but again, we're coming into rollover in about 2 to 3 weeks for this product. So we got to keep thinking that the volume and open interest numbers are going to be kind of hard to decipher for the next couple of weeks during any rollover. We did break out above the weekly kickoff high here, I believe, 105. Yep, that's right. And we added 900 in open interest. Volume was okay. It wasn't tremendous on what I would consider a relatively important breakout, but here we are. We're still kind of wrestling inside this area of previous balance. So last week's high, I believe, will be somewhat pivotal for us, and it's pretty much our overnight high so far today. Here's the 30-minute chart. So here's that overnight high, settlement just above it. 106.09 was settlement. And look at where our overnight high is, 106.0850, right on that last week's high. So we're in range, we're in value. We don't really have any overnight inventory with which to speak of. If we did, they may be a little bit short. But this market really kind of holding last week's high, yesterday's value area low as the extremes so far today. And those will be the extremes I will probably focus on for opportunities if I were going to be trading. If I'm even going to be trading this product today. Let's take a look at the 10-year now. Okay, open interest and volume all strong to the upside on an attempt to break out above the weekly kickoff high that failed. No acceptance above that move. We seem to be forming more of a range than so much of a breakout above weekly kickoff high. Our breakout below this bear flag got squashed. So here we are. We're in this range. Take a look at the 30-minute chart. Weekly kickoff high, swift rejection thereof. Settlement down here, 119, 22 and a half, 30 seconds. In range, in value, maybe a pretty decent rejection below here, which is, maybe that was early enough. Well, no, it wasn't early enough to close the gap, but relatively maybe close enough for rock and roll. But here we are. We're in range and we're in value. So again, I'm going to suggest trying to stay patient. You see what I'm saying? This today just seems to be a day where I'm going to be doing a lot of watching and waiting and not a lot of trading. These markets are really kind of offering the opportunity to be patient, to wait for better trade locations for the day. And of course, that can change at any time. That's our acronym here. Anything can happen. But it just seems these markets are offering us the opportunity to put on our shades, put on a cool shirt, and just watch and be patient today. Here's the natural gas. So we had another attempt to try and close up above weekly kickoff high that failed. We lost 4,600 in open interest. Are we starting to form a bull flag here? Is that possible? Of course it is. But remember, this market rolls on Monday to July. The energies roll every month, and it's just tough to trade rollovers. Here's the 30-minute chart. So here's our potential bull flag. We saw pretty decent volume even for coming into rollover yesterday, which is a little discouraging for a bull flag. We want to see volume slowing on the move to the downside. We've got a gap here. We've got 1-2 points of contact on this lower trend line. If we get the opportunity down there, there might be something relatively interesting. We've got a point of control that has now been checked in the regular trading hours. Got another naked point of control down here. I think this one has already been checked. So the move to the upside in this trip here has been relatively organized. By relatively organized, there's no gaps. There's no naked points of control that have been left behind that haven't now been rechecked. The next naked point of control is way lower. And I'll have to check these on Sunday night because we're going to be looking at the July contract, and there's always a little bit of an adjustment for those levels. So if there's one market that offers us an opportunity to trade outside of yesterday's range and value, it's the natural gas, also known as the Widowmaker. I'm not going to be messing around with this market today. Remember, it's Capital Preservation Friday. I guess that's about all we've got for those charts. Again, if you have not seen the disclaimer and the open for the forecast recap, Make Hogue Money group coaching, make sure you take a look at it. There's a considerable amount of risk involved in futures trading. We want to make sure that everybody is well aware of it. If you know somebody who has a gambling problem, especially related to trading, you can always, call Gamblers Anonymous, see if you can get them some help. We certainly don't want anybody putting themselves in harm's way just to be a futures trader. Remember, risk capital is money you can afford to lose. Coffee. Guess we've got some options notional expiration on 20 May. 460 billion of derivatives across single stocks is scheduled to expire. That may make the afternoon a little bit fun, huh, Mr. Evans? Drum Lab, where is the link to make Hogue money? Let me bring that up for you. I'm going to bring that up for you right now, Drum Lab. And when you register, you'll get my email number. And I would like you to send me an email with any questions. Let me get to know you a little bit. And here is the link for Make Hogue Money. Now, Make Hogue Money is on Tuesdays and Thursdays, Mr. Drum Lab. We do group coaching on Mondays and Wednesdays. I'll send you the link to that as well. And if you have any questions, send me an email. You'll get my email when you join, when you sign up, when you register for either of those. You'll get my email, but just in case, it's jhoagland@topstep.com. Looking forward to hearing from you. Good morning, Zach. My brother Rick, good to see you. Love you. Thank you, Keith. That's a very nice thing to say. Do I find any value in commitment of traders analysis for this type of trading? Always stale, but just curious. Well, that's why I look at it and I consider it, but I don't use it in day-to-day decisions. I find that it is a little bit stale. And people have told me I'm crazy, but we all have our way. We all have our vision of being able to watch the soap opera that is these markets. I call it As the Markets Turn. What will our heroes, the E-mini, S&P, and Nasdaq, do today? So I find it stale. I don't discourage anybody from finding a lens that they find useful, of course. Good, my goodness. Well, good. I'm glad that you saw that, found that the Make Hogue Money was a big success. We're having a lot of fun with it. We really like it, and if it continues to grow, we'll do more of it. Especially happens during quadruple witching, which is, thank goodness, is not today, but it is coming. Is intraday trade to close gap adequate versus settlement through to close? Kevin, I need some context in that, I think. Hey, come on. Come on. Lacey wants to say hi. Come on. Come on. Oh, there she is. Hey, Lacey. Say hello to everybody. She wants to lick the microphone. Here's my 80-pound female German Shepherd, Lacey. Say hi. All right, you gotta go. All right. So a date today. Milan, thank you very much. Make Hogue Money. Inspirational yesterday. The real deal traders on your webinar were a rare insight. Good. I'm so glad. So glad. There's so much good information out there. We had some really good folks. Meaning some consider a gap closed only when we get daily settlement above or below the gap. See, that's okay. Now I understand. Gaps to me are always regular trading hours to regular trading hours. So if the market opens outside of the previous day's range in the regular trading hours and then trades back to or into the previous day's range, I consider that a gap fill. So it doesn't have to go all the way through or back to like settlement or anything like that. Just the fact that in regular trading hours we traded back into that level, that to me is a gap fill. And I've been wrong about a lot of things. One thing I'm not wrong about is it's time to get ready for the equities open. Take your deep breath. Stay humble, grateful, and humble, grateful, and creative in your trading today. Marcelo, James, we are working on bringing the Make Hogue Money sessions to YouTube where they will remain and you'll be able to watch them whenever you want. So we're looking forward to that. We're just taking care of some details and we're going to hopefully be moving it to that relatively soon. So everybody will have the opportunity to watch the recordings. I'm going to get down to the proverbial trading pit right now. I'm going to be very patient today. If I don't do anything, it's still going to be a successful day. And I'm going to really manage capital, protect capital. If you had a really good weekend, if you had a really good week, you can have a really bad day because it just tends to be that way. So, all right, blessings to you all. Be good to yourself, be good to others, be kind, keep praying for peace. I'll see you on Monday morning. That long before I get to see you again? Well, I guess we'll have to suffer through the weekend, and we'll look forward to seeing you again next week. 7:45, YouTube, same bad time, same bad channel. No runs, no hits, no errors, nobody left. Have a great trading day and a wonderful, peaceful, and blessed weekend. Trade well, everyone.